Today, we're diving into the top 5 stocks to buy in the month of May 2022. I spent hours of research going over hundreds of different companies, and I found a few that I believe to have huge growth potential this month. Last month saw that SPY continue to fall after peaking briefly at the beginning of the month. With many stocks coming off of all-time highs, there are many opportunities to grab big names for pennies on the dollar. Today, we'll be looking at a few such stocks that not only are at a discount, but that are solid companies as well with strong projected growth. Now, you're going to want to watch this video all the way through because I'll be giving my full analysis on each of these stocks, and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. As a disclaimer, I am not a financial advisor and my stock picks are not financial advice. This video is for entertainment purposes only, and this is simply a compilation of stocks that I believe will do really well in the coming months based on my research. Anyways, before we get started, please do me a huge favor and hit that like button, and if you're new to the channel, please consider subscribing as well. I post weekly videos from my top stock picks to teaching you how to read stock charts to my trading strategies. You won't want to miss out on any of these videos, so make sure you turn on your notification bell as well. So without further ado, let's get into my top 5 stocks for May. First on our list is EOG Resources, or stock ticker EOG. This is a US oil and natural gas producer. Bought primarily as a hedge against inflation, EOG has shown a lot of strength at a time when the market has been showing signs of weakness. Market cycles have been in favor of energy stocks, and crude oil prices have especially benefited. In the fourth quarter of 2021, adjusted earnings per share were up 335% year over year. They also have a really good reputation for rewarding their shareholders through dividends as a result of their massive aggregation of free cash flow. And for those of you who may not be familiar with the term free cash, it simply refers to the cash that is left over that is available for use at the company's discretion. Oftentimes, free cash is the byproduct of a successful product that generates a lot of revenue for the company. This money in turn can be invested back into the company, be paid out to the owners of the company, or is often returned to the shareholders in the form of a dividend. Taking a look at the income statement, we can see that EOG took a hit during the pandemic as travel was limited and gas prices were low, but it has rebounded nicely in 2021 with inflation and rising gas prices serving as a major boost to their revenue. Coming over to the stats, we can see that it has a market cap of $68 billion. Its PE ratio is 9.12, and it has a very attractive PB ratio of 3.06. Its EV to EBITDA is 7.03. It has a beta of 1.78, which shows a higher risk relative to the market, but also shows that it can perform better than the market as it is a more volatile stock. Its 52-week high is $127.95 with a low of $62.81. Lastly, we see that it has a really nice dividend of 2.58%. Coming over to the weekly chart, we can see that it has been a nice uptrend between these two green lines, or a channel. Price looks to be heading down to this line here, which acts as a strong level of support based on previous price action. This could be a really great opportunity to start averaging into your position. Analysts have EOG as a moderate buy with an average price target of 142 and a high price target of 178. Next up on the list of top stocks to buy this month is Lowe's, or stock ticker LOW. This is a home improvement store that's seen rapid post-pandemic growth. In February, Lowe's beat earning expectations and raised their 2022 guidance. However, days later, news of the Russian invasion of Ukraine caused the entire market to slide. With rising interest rates, the housing market is predicted to cool off, and home sales already have seen a decrease by 7% this month. However, with such a high demand for housing and a nationwide housing shortage, Lowe's could still look to capitalize on this market and has an amazing growth outlook. Taking a look at the income statement, we can see massive year-over-year growth in total revenue, with current revenue topping $96 billion. We can also see that it has a market cap of $130 billion. It has a PE of 14.77 and an EV to EBITDA of 11.31. Its beta is 1.31. It has a 52-week high of $263.31 and a low of $182.08. This company also pays out a dividend of 1.62%. Looking at the chart, we can see that Lowe's has been falling sharply, but this current price presents an amazing buying opportunity. With prices currently at $197, we're approaching a strong level of support that prices respect in the past here at $187. Buying in around this level of support would be a great way to start averaging into a position with this company. Analysts have Lowe's as a strong buy with an average price target of $259 and a high price target of $292. Next up, we have Upstart Holdings, or stock ticker UPST. Now, this is a very volatile stock, which I'll show you on the chart in just a moment. And while this may be a little riskier, you could be rewarded really well, especially with with a good entry. Upstart recently had an amazing earnings report in February, with the company reporting revenue growth of 252% and an outstanding earnings per share of 89 cents, which blew projections out of the water. This company is a lending platform that connects loan applicants to lenders. This company uses AI to make these connections and is especially useful for loan applicants with an average credit score. A solid growth stock that experienced extreme gains following the COVID crash, Upstart has been recently down a lot due to market sentiment against growth stocks. Also, rising interest rates have played a role in less people seeking out their services. However, I'll get into why Upstart is oversold at this current level and why it is an amazing buying opportunity for you right now. Looking at the income statement, we can see a massive jump in total revenue, with current revenue sitting at around $841 million. It has a current market cap of $6.34 billion. Its PE ratio is 30.67. It also has a very attractive PB ratio of 7.86. Its 52-week high is $410.49 and its low is $72.50. I told you that this was a very volatile stock. Coming over to the chart, you'll see that I have a lot of lines on here, but that's because I see a lot of potential with this company and I've been looking for an ideal entry to this stock. And now is an amazing opportunity to buy. We can see here that price has been on a crazy downtrend. After a brief rally from positive earnings, the price has slipped back to where it was before earnings. Price is currently at this strong level of support at $74. This is a great entry point if you'd like to start a position in this company. If price continues to fall, however, I'd be looking at averaging down your position at $63. Analysts have Upstart as a moderate buy with an average price target of $167 and a high price target of $255. Our next stock on the list is Visa, or stock ticker V. Odds are that you have at least one of these cards in your wallet. Visa raised 2022 revenue growth guidance based on increased cross-border spending, which gives the company more money per transaction. Visa has its footprint all over the world. There are more than 3.6 billion Visa cards around the world, with over 70 million merchants included in its network. Analysts are saying that revenue could jump 18% this year. Looking at the income statement, we can see that Visa has had massive increases in total revenue year over year. We can see that as a $450 billion market cap, one of the largest in the world. It also has a PE of 29.24 and a PB ratio of 13.16. Its EV to EBITDA is 24.76 with a beta of 0.92. It has a 52-week high of $252.67 and a low of $186.67. Taking a look at the weekly chart, we can see that it's been consolidating for quite some time. However, with the world opening up more after COVID, we could see this as a catalyst for an increase in revenue, which could in turn boost the price of the stock. I'd be looking to enter a position in this range between $190 and $205. Analysts have Visa as a very strong buy with an average price target of $276 and a high price target of $312 within the next year. Last on our list is ASML Holding, or stock ticker ASML. This company has a global monopoly on extreme ultraviolet lithography machines. They can etch extremely small patterns on microchips. Now, fair warning, this is an expensive stock, so feel free to skip this if buying a $600 share of stock is out of your budget. However, for you bag holders, now could be an amazing opportunity to buy with a chance for massive returns. Now, just so you know, these machines sell for around $150 million a pop. This company expects double-digit growth in revenue and earnings per share figures both this year and next. Ultimately, I'm a buyer not only because of its long-term upside, but also because of its cornering of its respective market. ASML has been experiencing steady and increasing growth over the last few years, with total revenue now at around $18 billion. Their market cap is at $249 billion. The PE ratio is 33.78 with a PB ratio of 25.59. EV to EBITDA is 38.39. It has a beta of 0.98, which pretty much is on par with the market when it comes to risk. It has a 52-week high of $895.93 and a low of $558.77. Looking at the weekly chart, we can see that ASML has been on a major rally since COVID, with prices cooling off along with the rest of the market. Now, a price seems to be holding at this level at around $600. If price continues to fall, we could look into averaging down at around $500. However, if we see price establish a base at $600, we could see price jump to upwards of $800. Analysts have ASML as a moderate buy with an average price target of $703 and a high price target of $1,000. So those are my top stocks for the month of May. As always, remember to do your own due diligence on the stocks that I mentioned here. I've got a lot of faith in each of these stocks to do really well in the coming coming months, but that does not replace doing your own research on them to determine if they are the right investment for you. Only you know your risk tolerance, so please make an informed decision. Also, if you haven't signed up for a Robinhood account already, go ahead and click on the link in the description below to claim your free stock. Ultimately, it's a win-win because you'll not only be supporting me and enable me to create more videos like this for you, but you'll also get a free share of stock as well. If you haven't already done so, please hit that like button and subscribe to the channel, and don't forget to hit that bell to get notified when I post a new video. Anyways, thank you so much for watching and happy investing. Peace.